Hi everyone. Today, let's talk about the economic calendar, then we'll talk Fed futures, then we'll talk open options for tomorrow, then we'll go over the charts, then we'll go over my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the economic calendar for today, you can see mortgage rates came in slightly below expectations, which is interesting. We just talked about how mortgages getting closed went up, but mortgage rates are actually still lower than expectations, so that's interesting for sure. Looking at the non-farms here for today, you can see we got 145,000 versus the 200,000 expected, so much worse than expectations. It's about 75% of what we expected to get, but it is worth noting here that the previous iteration was elevated from 242,000 to 261,000. So ADP non-farms was higher than expectations for previous, but this iteration much lower than expectations, finally showing consistent weakness in the economy. And then looking at exports and imports, both were above expectations, so that's still strong. And then trade balance below expectations. So it's not terrible, but going down to ISM manufacturing, you can see much lower than expectations, 51.2 versus 54.5. So consistently economic factors are starting to come in below expectations. Then crude inventories minus 3.7 million versus minus 2.3 million. And then looking at tomorrow, we have initial jobless claims. Should expect that to be below expectations as well based on everything we're seeing. And then Fed balance sheet comes out in the evening tomorrow as well. And then I want to point out here we have Good Friday, which is a holiday for the markets. At 8:30 on Friday, we still have non-farm payrolls. This is going to come out when the market is closed, so keep that in mind. Anything that you hold into the close on Thursday will experience whatever happens from non-farms, as well as the unemployment rate. Again, based on everything we're seeing, I'm expecting these to be worse than expectations. And at this point, the market is starting to react negatively to negative economic data. So we might be in an environment where bad news is actually bad news as we go forward here. So keep this in mind. Anything that you hold over the weekend at the Thursday close is going to react to whatever data comes out on Friday. And we'll see what happens on Monday. Moving over to the Fed futures, you can see we drifted back towards that 50-50 level. You can see we were at 58% towards a pause yesterday, 42% for the 25 basis points. But now, once again, getting closer to 50-50. Obviously, this is going to continue to fluctuate, and basically we don't know what's going to happen in May quite yet. Moving over to the open options interest here for Friday, you can see max pain 405. So after today, that's a little bit closer to where we're at. Makes sense. Probably not going to get below 400. Tons and tons of puts here at 400. Put call ratio not super high compared to what we've seen at 1.79. And then total amount of options 1.47 million. So not a ton of options. Can definitely go lower here. But like I said, 400 is probably the bottom of the markets for this week. 401. 402, 403, probably what we're going to see. I would expect to close below 407 at the end of the week. We do have some 405 puts here, so 406 is definitely a possibility just below this call wall that we have at 407. So that's what I'm looking at, 401, 402, or 406 for your close at the end of the week. Moving over to the charts here, starting off with the S&P 500 on the hourly and the daily chart, you can see we gapped down. You can see we gapped down, filled the gap, and then fell, tested that support, and then rallied just a little bit into the close. This is still overall downtrending, but we haven't had the same kind of double top that we saw in the NASDAQ. Certainly possible that this just continues to sell off and we move back down to 399.25, something like that. Remember, max pain sitting at 405. Talked about a 406 finish, potentially 402, 403, somewhere in this zone. Seems like a solid level. Decent volume here at 403.60. Keep those levels in mind. But like I said, right now we are in a short-term bearish trend. Looking at the daily chart here, you can see this is still bullish. We got the engulfing candle going back to Tuesday. Got a moderate continuation to the downside, tested support. So now we're kind of neutralized here on the daily chart, looking to see if we're going to get that follow through to the 9 EMA, which is currently sitting at 403.28. So right on where we're looking at for an end of week price target finish. So it certainly could make sense that we come back into that zone, test the 9 EMA, and basically pause at that level before we go into the end of the week. Moving over to the NASDAQ just for a moment, you can see that double top pattern that we were watching. I thought we'd come down into this level here today around 316. We ended up getting all the way down to the 314 level, tested that just for a moment, and then rallied back up to the 9 EMA on the hourly chart. You can see we tested the daily 9 as well and bounced off of those levels. Certainly looks like this momentum is going to carry us lower. Daily chart stepping down, RSI on the daily stepping down as well, crossing below the SMA, volume picking up as well to the downside. Certainly looks like we could go lower, but remember this is a bullish trend on the daily chart. And just like we had some consolidation going back to the end of March, we could certainly see a little bit of consolidation here and get the continuation. And looking at the hourly chart, you can see exactly what that looked like going back to 27 March until the end of this down move at the end of day 28 March. So 2 big days of down move, which is what we've had here. We're at support, and if it's going to bounce, you really need it to happen now. Otherwise, we're probably looking back down to that 310.80 level, which if you include the factors from the S&Ps, which do look like they're going lower also, it certainly could be possible that we get down to that 310.80 level tomorrow. In terms of upside, still watching that 316.36 level to see if we can get above there, and then looking up at 321.82 for the next level of upside from there. Moving over to the Russell and the Dow, you can see the Russell sold off once again, gapped down from that end of day rally that we had, and then fell all the way down to about 172.50. Ended up rolling this call down pretty early in the session to 173, which ended up expiring worthless here. And it looks like we're falling a little bit after hours. Potentially, I can get a better entry tomorrow. We'll see how this plays out if this is going to continue lower. Looking at that 171.50 level. Below that, we have 170.35. And then if both of those break down, then we're looking at an acceleration to 167.47. So a couple of levels to the downside here. Certainly could bounce from where we're at, looking to get above 174.38. And then we have major trend resistance up here at 177 or so. So a couple of levels to watch. Overall, still looks weak. Momentum still bearish. RSI definitely bearish. The Dow, however, looks much stronger. Oil and gas stocks continue to do well. We are drifting up slowly here. We're not taking out these recent highs, but we're not falling off a cliff like most of the other major indices. Momentum is bearish despite this slow drift up, which is interesting. RSI also giving a pretty weird read. We're below the SMA, but we're not downtrending. So keep an eye on this. The Dow doing some weird stuff. If the Dow starts to downtrend, then that's probably going to signal a little bit of an acceleration for the S&Ps and probably the NASDAQ, as the Dow is still holding up quite strong compared to everything else. Moving over to Apple and Tesla here today, you can see Apple finally broke down, had a pretty big leg, tested that 162.50 level and then bounced into the close, finding some weakness here today, selling off a little bit after hours. Definitely looks like it could get back below that support level. If we do close below it, then we're looking down to 160.50. Couple of trend lines in this zone, so probably strong support. You can also see that area of highest volume sitting there at 160 as well, so certainly could come here, find some support and rally again, but I wouldn't expect this 162.50 level to hold. I would look to see a move down into this area, and then buyers will probably recommit at least a little bit in this zone. Moving over to Tesla, however, not a good story. We retested the 193.50 level just for a moment and then sold off super powerfully, got below the 188.50 level and then continued to sell off. Tested the high of this previous zone. I don't consider this a super powerful level here, and I would expect this to come down to 182 tomorrow. So a little bit more weakness in Tesla is what I expect. Momentum bearish, RSI super bearish. And this is definitely starting to make some lower lows here, which is weaker than we've been seeing. And we also have this trend line that I was watching, which had been holding up this shorter term rally. Now that that is broken and we're below all of the EMAs and SMAs on the 4-hour chart, you have to assume that Tesla is going to start going lower. If we get below 182, then we have a little bit of support at 178. And then we have all the way down here at about 170.50, these previous lows going back to early in March. Moving over to Amazon and Microsoft here. We were watching Amazon as one of the stronger stocks. And then we got a big leg down, made a lower low here, and we looked much weaker on the day compared to what we've been seeing. Big drop below the 50 level here on RSI on the 4-hour chart. Looking to see if we get to this 100 level. If we break that, then we're looking right around $99. And then below that, we have the 200 SMA sitting at 98.22 here on the 4-hour chart. So a couple of levels of support in this zone, but right now this looks much weaker than it has here recently. Last time we saw a leg down like this, we saw a little bit of a bounce and then a continuation down to the 200 SMA. And it does seem like that's what we're going to get here. Maybe a short-term bounce, continuation lower. Looking over at Microsoft, definitely started to roll over here below the 9 EMA, VWAP, and the 21 EMAs here. Next lower level, 281.30. If we can get below that, then we have some support at this mid-trend line at 179.42. But then we have area of highest volume, 277, and then this zone that I was watching going back to 275.50. So a couple of levels of support, definitely looking to roll over into bearish territory. Momentum bearish, RSI bearish here on Microsoft. Moving over to staples and discretionary. Staples continuing to rally, made a new high close here today. Can't get above the 75.40 level, so that's interesting. Threw a big wick through it and then rejected. We can hold above that level, then we could see a push up to $76. That would be definitely interesting. RSI almost overbought. Momentum pretty flat, but at high levels here. EMAs on the MACD still trending higher. And then looking at discretionary, we ended up getting exactly what we thought we were going to. We had those inside days, and then we broke down, making a new low here. Got through the area of highest volume, got through the 9 EMA. Next level, watching that 143 level at the 144 EMA and the 21 EMA. Below that, you have VWAP. So a couple of levels in here to watch at about 142, 143. And then we have the lows here going back to 141. And then a couple of wicks here below that. Either way, now we came into the zone, got rejection, and you have to assume that this is likely to move lower and potentially even make a lower low compared to what we saw here in the beginning of March. Moving over to energy and healthcare, you can see energy rallied here today, bounced off that 48.56 level. Talked about that level yesterday, didn't get below it, ended up turning a green day, makes sense. RSI still lower, momentum still stepping in the bearish direction, so we do have to keep an eye on this. Overall, kind of neutral here on energy sector, just because we're so extended, but we're not moving in a major direction here. Looking over at healthcare, you can see we gapped up through that resistance level and then got super close to the next price target at 133.59. Everything looking like it's going higher here on healthcare. RSI, super overbought, momentum continuing to look bullish here. Zooming out, if we can get above this next resistance, just to give another price target here, probably 135.58, 135.60, back at the highs from this previous consolidation. Moving over to IYT here, you can see we did continue lower. We're below all the EMAs and SMAs here on the 1-hour chart. It's held above this area of highest volume at 219. So kind of in a holding pattern, still looks kind of bearish, but hourly chart showing some potential for some bullish price action. You can see we had this big rally, the move down, but RSI getting very close to the same readings that we had at the lows at the end of March. So we have price divergence in the bullish direction, but RSI sitting at the same levels. Question is, are we going to find a little bit of support here and start to rally into the end of the week? That would be interesting. Overall here on the daily chart though, you can see it looks like a gap down, fill, and then move lower. This is kind of a doji though, and this could certainly be kind of an island reversal type look where you get that gap down, indecision, and then a move higher. Momentum still stepping in the bearish direction, but the EMAs on the MACD are slightly trending higher, so that's interesting. And RSI is above the SMA, so maybe we come into contact with that SMA and then find a little bit of a bounce. That would be interesting. So keep an eye on transports. It did sell off like we thought it was going to, but it's showing some signs that it might be looking to reverse to the upside over the next day or two. Moving over to semis, you can see we gapped down, left that gap behind, hit the area of highest volume here on the 4-hour chart, down at 251.47. Certainly could get a little bit of a bounce up to 257.14. That would be interesting. But right now, this is rolling over a little bit. Certainly does kind of look very similar to what we saw on this previous gap down, moved into a bounce, kind of like this is setting up to do. So keep an eye on that. Certainly could go bullish. But right now, MACD pointing to more bearishness. RSI actually pinning a lower RSI read compared to that previous move down despite higher prices. So that's interesting. Might see a little bit more weakness come through. Otherwise, moving over to the daily chart, you can see that gap down set up very similar to the move down that we had at the end of March, which ended up being a gap rally. So keep this in mind. Semiconductors might find a bounce tomorrow. Maybe they move higher. This is still overall a bullish trend, so you can't ignore that. Looking at daily MACD, looking to step into bearish territory, and RSI also pointing into bearish territory. But remember, it's eerily similar to that same move down that we had at the end of March. Moving over to the 2-year and the 10-year, you can see here continuing to trend down on both charts. Momentum still bearish, RSI still bearish. 10-year yield showing a new close, got below the 3.325 level. So this is still looking more and more bearish. 2-year yield holding up fairly strong through some wicks through this previous level here. If we get below here, the next level is down at 3.276, right at the highs of this previous consolidation. So that would be a pretty substantial move lower from here, about a half a point to the downside if that does happen. I don't really think this is going to happen until we at least get a pause from the Fed, but it is something to watch for. Similarly here on the 10-year, continues to downtrend, made a new closure low on the daily chart. And to put a next lower level here on the 10-year, you can see 3.03 down at the highs from this previous consolidation. Again, would be a pretty big move down from here, about a third of a point. And I don't necessarily think we're going to fall that hard until we get some either major data or we get a pause from the Fed. Moving over to stocks above their 20-day and 50-day averages here, you can see 20-day continuing to downtrend. But looking at the 50-day, you can see we held up fairly strong today, actually, despite the bigger moves down that we saw. And this kind of looks like it's setting up for a little bit of a pullback here. If we get below 40 tomorrow, going into Monday, then we can set up a little bit more bearish, in my opinion. But right now, we're kind of in a holding pattern on this 50-day chart. But the 20-day chart is still showing a little bit more bearishness. Looking at the 9 EMA on the daily chart, and then below that we have 5175 as an area to watch. You can certainly chop between these two levels, kind of like we did here in January and February. But overall, once you get that first dip, you do tend to see that continuation over the coming weeks. Moving over to the dollar just for a moment, you can see we rallied throughout the day, did not get below these previous lows. Looking to see if this rejects from here, moves back down to about 101.25. Then if we get below there, that would be pretty interesting going into tomorrow's session. Looking at J&K, looking at high yields here, you can see we came into this level, found a little bit of a bounce, lots of volume on the last candle of the day, which ended up being a pretty strong rejection at that 91.42 level. Looking to see if we bounce back up to maybe 91.80, that would be interesting at the 200 SMA here. If we can get above there, then we're looking at 92.50 once again. Overall, this looks like a rejection, shorter term bounce, potentially looking to find a little bit of support. And then we'll see if this creates a lower high or a higher high, certainly possible. But right now, looks like J&K is a little bit extended to the downside. Daily momentum, however, still bearish. Daily RSI still moving in the bearish direction, but above the SMA. So looking at this going into tomorrow's session, pretty neutral on J&K. Moving over to TLT, still looks good, rally still intact, looking to take out these previous highs, got above that 108 level, looks strong. Daily chart looking at 109.09 as this previous high. We can get above there, then we're looking up to about 110, 115. Overall, still looks bullish, almost overbought here on the 4-hour chart, but still looks like it's going to go higher here on TLT. Moving over to the VIX here, you can see we tested that 20 line once again and then sold off. We get below this 1897 level, then we're looking at 1850 or 1815. But if we do find support in this zone and we get back above 20, that would be interesting. Then we're looking at 2091 and then 2250 here on the VIX. Still looks bullish to me. Despite this kind of topping pattern that we saw in the shorter time frames, we're still holding a little bit higher than we were before, and it still seems possible that this is going to go higher in the short to medium term. Daily chart, momentum, bullish, 12-hour momentum, bullish, 12-hour RSI still looks bullish. Shorter term charts do look like we might go just a little bit lower and retest 1850 though. VIX looks like it's moving lower going into tomorrow's session. Maybe we find a bounce at that 1850 mid-session and then we start to push higher. That would be interesting. But overall, in the medium term, the VIX looks like it's going to break out at some point. Looking at my results for the day, you can see I managed to be down only $6 here on my IRA position, despite the IWM being down $1.69, right around 1%. So I didn't take all those losses, which is good. But what I forgot to do was take a new position here on the IWM. That was a missed opportunity. It is down a little bit after hours, so maybe it falls a little bit more into the open and I can get a better entry. That would be nice. Looking at the Qs here, though, I had a bunch of positions on. I was trading it pretty much throughout the day. Sold the 315 put, ended up worthless here at the close. I had two 321 calls going into the day, rolled those down to 320, max profit on those. Sold a 313 put for tomorrow, as well as a 319 call. And then I sold a 320 call pretty early in the session, which is close to max profit already. And then I did end up rolling the 315 put that I had for tomorrow's session out to Monday. And that's down at 312 now for a $1.11 credit. We'll see how that continues to play out. I wasn't trying to get a sign on these shares, and I do think a little bit more downside is possible tomorrow, even if we end up ultimately bullish on the day. So overall, still neutral on the NASDAQ. And then looking at my XLE position, not much to say. Continues to be in a holding pattern. I might look to roll this out a week looking in tomorrow's session, depending on what we're seeing, just to get a little bit more credit and maybe get out of these shares for a little bit higher price. But we'll see how it plays out in tomorrow's session. Overall, like I said, pretty neutral across the markets. Comment down below what you think of all of the weak economic data that continues to roll in. Are non-farms on Friday going to affect the markets for the Monday open? Seems likely, but where do you think it's going to land? Is it going to be weaker than expectations, like pretty much everything else we've been seeing? Otherwise, make sure you like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.